Hi, Chamber members. Thanks for coming out to our second podcast. We're excited today to be interviewing Sean O'Connell with PB Mayors. He's a longtime Chamber member and a great CPA. So, Sean, tell me, I hear there's some interesting things going on the federal level with taxes. What's new?
Well, there's the new Tax Cuts and Jobs Act, which is really affecting people now as they file their 2018 income tax returns. One thing is that Congress lowered the individual tax rates and gave a much larger standard deduction of $12,000 for a single person and $24,000 standard deduction for married couples. So more folks are not filing the long form and their taxes generally are less than they had been. Yet a lot of people are filing their returns and they're saying, well, my refund isn't as big as it used to be. Or in some cases, I owe tax and I thought I normally get a refund. Well, they may have forgotten that last January, the withholding tables were changed and reduced, so people were getting more take-home pay throughout the year.
Got it.
So some people are in a situation where their tax is actually less for 2018, but their refund is less, or they might owe money as a result of that.
Got it. So, as a person who's doing taxes, I got the federal, so that's good information. What about the state? I hear that there's some changes that are going on at the state level. What's going on there?
Virginia is a state that doesn't always conform to all of the federal tax changes. And there was a holdup with our state legislature in Virginia about what the rules, in fact, were going to be for 2018. And finally, on February 15th, the Virginia State Legislature passed an emergency legislation to conform to the federal tax code through a certain date and allow certain benefits but not others. They also have a provision, because they're going to get an additional windfall from this change, that they are going to send refund checks separately of up to $110 for a single person and up to $220 for a married couple.
Okay.
Next October, people will receive their Virginia refunds separate from their other refund, but only if they filed their Virginia state tax refund for return for 2018 by June 30.
Okay.
Or July 1. So the normal due date for Virginia returns is May 1st, but you have to file by June 30 in order to get this special refund of an additional $110 or $220 for married couple.
Got it. So now on a federal level, I understand that there is a way that I can possibly get 20% of my income tax-free.
Good.
And you have a game that can kind of help me make that determination. Let's see this game that you're talking about, please.
Okay. Well, one of the big changes was that big corporations had their corporate rates slashed from 35% down to 21%.
Okay.
But you are the backbone of America. You business owners that employ people and are S corporations or partnerships. So you don't have a corporation that pays tax. It all flows through or passes through to you.
Correct.
So what did Congress do for you? Well, there's a new deduction called the Qualified Business Income Deduction. And to help understand, it's really easy. You can get wildly complicated with it, but I brought this basketball court. I call it the tax breaker arena. Now, there's a line that divides any gymnasium in two. It's called the mid-court line or the center court line. When a basketball team holds their practices, they have the entire gym that they can practice on and run drills. Often they divide into two groups with maybe the forwards and centers on one side and the guards on the other, and they do different drills. They have different rules that they apply. And so depending on whether one is a specified service, trade, or business, meaning a white-collar service like a doctor, a lawyer, an accountant, for those businesses, they get a deduction based on computations on this side of the gym. All other businesses, restaurants, retailers, wholesalers, manufacturers, rental activities, all of those things are played on this side, which is actually a better place to be because the points you score here are higher. You get bigger tax deductions. So now, let's say that I have defined whether I'm a specified service or I'm something else. That dictates which side of the gym I shoot on and what tax deductions that I get. Do I get to shoot anywhere on that side of the gym? Well, it depends on the level of my taxable income. So for those filing joint tax returns, As long as their taxable income is less than $315,000, and for most Americans that is the case, they get 20% of their business income tax-free. In that case, whether they're a specified service trade or business or not, they get that full deduction, full points. As their income rises, for higher income Americans, they may get partial points. There may be a phase out. And for those in the highest income levels, only those that are specified service trades or businesses in the highest income levels get no deduction. So in this game, 6 different things can happen, and 5 of them are good. It's only those that are high income and have specified service trades or businesses. Contrast that with a very high income manufacturer or wholesaler. They may get potentially limited points because it's either 20% of their business income or 50% of their wages, whichever is less. So they too can get huge deductions, essentially getting 20% of their income tax-free and only paying tax on the other 80%.
Very good. This is such great information. We really appreciate you coming out and finding a way to make this fun and interesting. For additional information, folks can, of course, follow up with you, or, of course, make sure to visit us at any of our future breakfasts, because we will, of course, have topics like this at our business breakfast. Thanks for visiting us. See ya.